Overnight, two shocks. Israel and Iran traded direct strikes, and oil gapped above $97 a barrel on fears the Strait of Hormuz could close. At the same time, South Korea's stock market crashed more than 8% and tripped its circuit breaker. Both shocks pointed the same way, down. And then the American session closed mostly higher. Because the calendar doesn't care. On Friday, the largest public offering in history, about $75 billion of SpaceX stock, lands into this tape, into a 10-year treasury at 4.5%, with a Federal Reserve rate hike now priced for December. $75 billion of supply into the worst possible backdrop. So where's the edge into a week like this? Not in pre-positioning. 3 binary tests land in 5 days, consumer inflation and Oracle on Wednesday, SpaceX on Friday. A tape that gaps both ways overnight is one to react to. Let the evidence print, then act. This is the asymmetric, issue 10, the Crossfire, tech and crypto investing for thoughtful retail from an operator's lens. The test week opened not with a quiet wait, but in a crossfire, a war shock and a rate shock, hitting the same tape at once. Here's the one-line read. A twin shock the tape refused to keep. A war sent oil above $97, a deleveraging crashed Korea's market 8%. Both pointed the same way, and the American session bought it anyway, closing modestly higher even as the 10-year kept rising. Now the exams, inflation and Oracle on Wednesday, the largest public offering ever on Friday. The same discipline labels run throughout. Confidence, high, medium, or low, consensus versus variant, what the market believes and where we may differ, and on every call what would change our mind. This is research, not advice. Part 1, the Crossfire, 2 shocks, 1 tape, 3 tests. With a night left the tape. Overnight, Korea's market fell more than 8% and oil gapped to $97.50 a barrel. Yet the American session closed mostly higher, but only modestly. The Nasdaq up about 0.9% and the S&P just 0.3, while the Dow actually slipped into the red and small caps led, all on a chip rebound. Underneath it, nothing eased. The 10-year treasury rose to 4.5%, its highest since May. And the odds of a rate hike by December climbed from about half to nearly 70%. The relief was in price, not in the cost of money. Start with rates. Wednesday's consumer inflation report is the swing print. April ran hot, core prices up 0.4% on the month. Consensus looks for the core to cool, with the headline still firm on energy, and Monday's oil gap only firms it. The core is the number the Federal Reserve watches. A cool core is the bull's first lifeline. A hot one rearms the hike trade, now with an oil shock on top. And behind it waits a hawk. Kevin Warsh chairs his first meeting June 16th and 17th. Then the structure of the market. Overnight, Korea's market crashed 8.3% and tripped a circuit breaker. Samsung and SK Hynix each down about 10%, after Broadcom guided its artificial intelligence chip revenue just below what the street whispered. A record number sold as a miss. Then the American session did the opposite. The chips that broke on Friday led the bounce, Nvidia, Micron, and Marvell all higher, on news that Iran had halted and a deal was in reach. The bounce had a loud cheerleader. Nvidia's chief executive spent the day calling the sell-off a buying opportunity, a chief executive defending the floor mid-rout. Read it as floor defense, not a top tick. Small caps actually led, but breadth was thin, more new lows than new highs. The 10-year rose, and the shocks are being faded until Wednesday's data says otherwise. Into that tape lands the largest public offering in history. SpaceX trades Friday, about $75 billion raised at a valuation near $1.8 trillion. Retail has been let in, and crypto venues are already trading it at a premium. A strong debut into a hawkish curve and a live oil tail says the issuance vacuum still has appetite. A week one says the demand limit is finally found. Gold and oil. Here's the tell of the day. Gold fell to about $4,300 on a day a war reignited. The rising cost of money outweighed the safe haven bid. The dominant variable is rates, not the geopolitics. Oil gapped above $97 on the strikes, then eased as Iran declared its operation over. 2 choke points are now in play, the Strait of Hormuz and Bab el-Mandeb. Europe is responding. The European Central Bank is expected to hike this week, on the oil spike. And here's a cleaner, non-equity way to own this war tail: the critical minerals complex. Both silver and copper now sit on the United States critical minerals list, with a Section 232 copper review due June 30th, and both sold off Monday with the rate repricing, a better entry than chasing the spike. Put it together, a war shock and a deleveraging shock hit the same 8 hours, both pointing toward higher oil and higher for longer rates, and the tape closed mostly higher anyway, while the 10-year still rose. The relief is in price, the cost of money is unchanged. 2 days before the data that adjudicates it, the message is simple: don't preposition into a proof week. Less duration, less leverage, and more cash to deploy on the other side of the prints. Part 2, in focus, the name at the heart of the test, the data, then the debate. The lead is Oracle, and it reports fiscal fourth quarter earnings Wednesday, the same day as the inflation print. No single name better expresses the regime's question: can a debt-funded, backlog-driven build-out convert into cash flow as the cost of money rises? The bull case is enormous: an order backlog of $553 billion, up more than 300%, with cloud infrastructure revenue up 84%. The street expects about $1.96 in earnings. The bear case is the balance sheet: capital spending near $50 billion this year, more than double last year, funded by roughly $43 billion in new senior notes, with free cash flow running about $25 billion negative. Backlog is not cash. Wednesday is a clean, binary test of whether it converts. Bitcoin dipped toward $60,000 on the twin shock, then recovered to about $63,000, holding above its long-term average even as sentiment sits in extreme fear. But the real tell is the ratio of Ether to Bitcoin, which fell to its lowest in a decade, a sign the speculative, highest beta end of crypto was the funding source in the deleveraging. The structural thesis is intact. The setup is capitulatory. A reclaim of 63 to 66,000 would mark a change of character. The catalysts come first. And the thematic read: the issuance calendar is now a macro variable. SpaceX's $75 billion offering, on top of the private artificial intelligence capital wave, pulls cash out of the secondary market to fund the primary, and the drain shows up as price. And under the surface, the private market is eating the public one. Secondary market volume is running near twice its 2021 peak, with the marquee private names trading at a premium. Capital is being absorbed before it ever lists, which is why the one deal that does list Friday is such a clean read on what public demand has left. Part 3, the Crossfire signal: how to read a week of 2 shocks and 3 catalysts. Consumer inflation is the master switch: read the core, watch the oil. Oracle is the artificial intelligence trade's cash flow test: backlog is not cash. SpaceX is the issuance trade's demand test. And the war is the tail nobody can price. It cut both ways in a single session. The edge stays in optionality, the least overpaid quality, the unlevered store of value. And the critical minerals complex as a direct way to own the supply distortion tail. What we are watching, the proof week. Consumer inflation on June 10th, the master switch. Oracle's earnings the same day. Producer prices and the European Central Bank the 11th, a central bank hiking into an oil shock. The SpaceX debut on the 12th. The Federal Reserve and Warsh's first press conference on the 16th and 17th. Plus whether the chips hold Monday's bounce, whether Bitcoin holds 60,000, and at month end. A Section 232 copper review on June 30th. The policy catalyst behind the silver and copper trade. And we keep score in public. Oracle, watch the print. Broadcom and Alphabet, quality core, patient on entry. Bitcoin, a capitulation tape, entry sensitive. Amazon and Constellation, attractive. Gold, constructive. Cigna and EQT, still attractive. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. A war shock and a rate shock hit together, and the tape shrugged off both, closing mostly higher while the cost of money rose. Wednesday adjudicates everything: read the core, watch the oil, and watch whether Oracle's backlog converts to cash. And SpaceX is the issuance trade's demand test into the worst possible backdrop. The edge this week is not a position, it is optionality, and the dry powder to act after the evidence prints. That's the Crossfire. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. We'll see you in the next issue.